The world's stock markets are changing their flavor. Markets are shifting. New tech is moving aside for old, revised, and revamped industries. There's a fundamental change. Even Apple had a drop in sales for the first time ever. Investor sentiment has turned to commodity and basic material stocks as the growth sector has been weakening. Analysts call it going basic. Others believe it is a natural cyclical change. Matt Tuttle, CEO of Tuttle Tactical, favors the shift.
We like energy. We like the metals and mining stocks. We like solar stocks. That's a new one that we've added that's been real interesting. And what we don't like is we don't like biotech. We don't like technology. So, those are the main sectors we're looking at.
Oil prices have seemingly stabilized, as have most other commodities. The dollar languishes following the U.S. Federal Reserve decision to stand pat on short-term interest rates. And for Tuttle, the Fed will not increase rates until after the presidential election in November.
But we don't see the Fed before the election. So, we wouldn't be surprised to see a rate hike after the election, but I don't think Yellen wants to, be the person responsible for electing the next president.
Traditionally, election years have been good for markets. Analysts believe the U.S.-based manufacturing is coming back, streamlined, modernized, and innovating. Jared Dillion, a Wall Street trader, says global investors see an opportunity.
Materials has rallied a lot, but in talk about being underinvested, global asset managers around the world are totally underinvested materials because it hasn't worked for 5 years.
A stabilization in commodity and basic material prices, a perception that perhaps technology is at a plateau, and a contentious election campaign are all contributing to a fresh look at what to sell in May, what to invest, and not go away. Bernard Shusman, VOA News, New York.